Certainly, the manner in which policy is being formulated in the United States is different from what I am used to. And because there is a sense that some decisions come together quickly, that may not include the fulsome set of opinions and data that they might normally, that does diminish the confidence that some around the globe have in the United States' ability to set policy. In that situation, as with any country, you have to begin thinking through your portfolio allocations. Any diminished sense of confidence would tend to lead you to think about deploying capital elsewhere or in a different market. And I do agree with former Secretary Yellen that some of this is being reflected in the value of the dollar and in the U.S. Treasury market, which, until somebody tells me differently, is still the bedrock for the rest of the world. That said, the term premium that investors are requiring to hold all those treasuries is going up. And not mentioned is the fiscal discussion that's currently underway in Washington. Everybody's been so focused on trade that they've perhaps not paid as much attention to the budget negotiations. And the instructions that the Congress has given for that process threaten to increase our debt and deficits quite substantially over the next decade. And I can't help but think that Treasury markets are reacting negatively to that as well.
So those two factors are the main drivers of the U.S. Treasury. You are saying the budget negotiation as well as some kind of trust erosion in U.S. policymaking. Do you see those factors improving in any way down the road? I mean, we're not just talking about the near-term future, but in 3-5 years from now, are we not going to be talking about the same factors?
Sherry, that's a fabulous question. Let me answer with some hope and then some sobriety. First, it is apparent that the White House has been paying close attention to what's been going on in the financial markets. And as a signal that they may have taken things a bit too far, they have, since late last week, begun to announce some walk back of some of the tariffs, still very, very high, mind you, but also the hint that there are negotiations that will start, and hopefully right soon, that might ameliorate some of the worst impacts on global commerce of the tariff war which they initiated. That said, I have encouraged investors to just recognize that the true north for this administration is, as Donald Trump highlighted in the opening part of this segment, he would like to see production come back to within the United States. And while he's willing to give a little time for that to occur, I don't think that he has changed that basic vision. And so you're correct, Sherry, in thinking about, well, if that's the destination, we could see ups and downs. But if that's going to remain the acid test of whether the results are as Trump would like to see them, then we should not expect tariffs to be rolled back in any meaningful way anytime soon.
And I would imagine the same applies to the budget conversation, the politics behind it, Carl. But I do want to get into, I guess, sounding a little philosophical this morning, early on in the show as well, this realignment of trade. And we are seeing capital flows being realigned as well. Does that challenge the status of traditional assets? I'm talking about, not just talking about the U.S. dollar or U.S. treasuries, but perhaps people are looking for something that goes beyond what they've already known for decades.
Yeah, it's. I've been using the phrase "I never thought I would see the day" quite often recently, Sherry, and the questioning of the primacy of the dollar and U.S. treasuries as the control asset to this degree is not something that I ever anticipated. But it's really quite natural, and for two reasons. One, as we've already discussed, the administration has planted seeds in the minds of global investors that they might not want to have such a heavy allocation here. The other is a bit more subtle but very powerful, and that is economics teaches us that a country that has a trade deficit will have to have a capital surplus to offset it. And if the Trump folks are hoping to bring down the trade deficit, then there will be less capital coming in this direction. And so one of the things that I would caution is be careful what you wish for, because in pursuing this policy all the way to its end, you will by necessity create an environment where the dollar's paramount status as a reserve currency will just not be the same. History tells us that regimes, kingdoms, regions that had the reserve currency status suffered immense economic hardship after they lost it. And I'm not sure that's something that we would want to invite.